Tawana, you're always the first one on here.
Am I? On time.
Zach Booth almost beat you.
How was your vacation?
It was good. What's going on in Tawana's world?
You left us for dead, Jimmy.
Yeah, please. I left you for dead because you don't have an iPhone.
That is so wrong.
I know. I didn't mean to. I just didn't know. I should have thought of that. But yeah, you don't get you don't get texts on Wi-Fi. Only the.
Yeah, stop the droid shaming. Just stop it. Just stop it. No, but no, you did help me. I appreciate you. I do.
So when you said your offer wasn't accepted, but they said that it was good, how did that make you feel?
It made me feel good. I actually reached back out to him and said, what could I have done to make it better? And he said yours was actually the third best. Yours like the third highest.
Okay.
But my client was my cousin, and I just couldn't see him paying any more than what we offered for that house.
But how'd your cousin feel?
He was fine with it. He like we discussed, I told him from the beginning, don't get your hopes up on anything that you see. Like, you have to be realistic. The market is crazy, and he was shocked that there were already 2 offers on the property the first day we went to see it. But I told him this is how the market is moving.
Yeah. Well, I'm glad. I mean, that's how it should be every time. If you don't get it, you did everything right except for price.
Right.
You got that, the good job call from the agent. So.
Yeah. And he was actually with KW Cherry Hill. I think I told you.
Who was it?
Joe. I think his name was Joe. Let me see. I know you said you looked him up on Facebook.
Oh, okay. I remember talking to you. Yeah, I don't know him. I thought it was somebody else.
Yeah.
All good. Oh my God.
What? Oh, hey, Jim. Oh, missed it again.
This is.
Is that your face?
That is hilarious.
Oh, I'm sorry. Hey,
What did you do to him?
I didn't know my video. I didn't know my video was showing. I'm so sorry.
Cool. Just another.
Invite
Invite you onto the Zoom. This is what I get in return, huh?
Love you, Jim.
I got some things in mind now. When are we going to the shooting range again?
Pushing you off the boat first. Nice to meet everybody. Finally in person. I get to see some faces to the names that everybody's been talking to.
Yeah, same here.
It's nice to meet you finally.
Yeah, so this is, unfortunately, I'm having a lot of regrets now. So let's see if we can turn that around.
Listen, honestly, you don't need me at all because you're coaching. I get questions and like they answer the questions that they ask me before they even ask me, and they know the answers before I'm even giving it to
All right, let's end the call. That's perfect.
Yeah, seriously. Okay, see you later. Bye, guys.
So I don't know if there's anybody in here that doesn't know Ryan, obviously lender, guaranteed rate.
That's me.
Pretty accessible.
I haven't met Ryan yet.
Hi, Christina. Nice to meet you, Christina.
Nice to meet you.
So
you're a b-ball fan. That's good.
Kobe
like that.
fan.
Nice. Good deal. Who's not, right? Yeah, I don't know. There's a couple other names on here I haven't met yet before. Hopefully we'll get to meet you soon and get to help you out.
So yeah, I mean, I told Ryan a little bit about, us and that we do this, essentially twice a week. I'm sure more people will jump on. I know more people will. But yeah, there's no real agenda. I'm sure that some of you guys have some questions you wanted to ask Ryan, and as he talks, you're going to have a lot more questions, and I'll kind of help dive in on stuff too that I know that we've been talking about a lot. So, I mean, if you want to start, Ryan, if you want to talk about yourself, like keep it short because I know you could go on and on.
I have like one care in this world, and it's Jim. I love Jim.
I can see why I recommend him.
I always think about him often. Probably more than my wife. No. So I have been in South Jersey my entire life. Grew up in Cherry Hill. I live in Berlin. I've been doing mortgages for about 16 years. I've been with 3 companies. I've been with Trident Mortgage Company for the majority of my career. They were the in-house company for Berkshire Hathaway, Boo Berkshire. Then I made a move to Citizens Bank. So I've gotten the banking world as well as a mortgage company world. And now I'm back to the mortgage world because banking is a little bit slower paced than what I'd like. And now I'm at guaranteed rate, if as most of you know already. You guys really don't need a whole lot about me. I think we've talked already. A few of us, or majority of us, have talked a lot and gotten to know each other. You guys know I'm goofy. I like to have fun. I joke around often, but when it comes to business, I'm all about the business. I like to keep it as professional with the clients as possible for the most part, until we break those walls down and become friends with everybody. So yeah, Jim asked me to come on, talk about a couple of things. Now I'm we're talking about appraisals and
I mean, that's the biggest thing right now, right? I mean, that is
Yeah.
the biggest thing.
So I think appraisals, and then like the type of financing that the clients are getting, we should talk about, because I think we're starting to see that with a few of our clients that we've been talking to. Some of the people on the call know more about what I'm talking about. But so first of all, appraisals, man, they are like the big green monster that everybody is like scared of these days. Why? Because every house is going for way over asking price. It's scary. I mean, the buyers to get a house in this market have to put really aggressive offers in, and we hope that they're going to accept them, and then we hope that they are going to that they're gonna be able to appraise at that value. So appraisals, how do they work? Well, back in the day, they worked where we could actually pick and choose our own appraisers that we want to use. And it would be like, hey, I know this guy or I know this girl. I want to use them. I'm going to hire them to do this appraisal on this property because I know that they know this area. And you know what? I know that they know me and they want me and my realtor to close this deal, and they're going to do whatever we need them to do. Well, the government caught wind of that, and they put a big kibosh to us being able to pick and choose, actually even be able to communicate with appraisers. I am not, as a mortgage loan officer, or they call it here a VP, I am not allowed to have communications or talk to an appraiser at all. If I try to call them, an appraiser can call the CFPB and they can report me for trying to coerce them to do something, even if I didn't even try to coerce them. In that same realm of that same aspect, the appraisers that we typically have a round robin, a big pool of appraisers for every single area that we work in, and it's a round robin. I mean, we don't get to choose it. We throw an order in, and this management company pulls that out and says, okay, we're going to tie this transaction to this appraiser. Here you go, accept it or deny it, and they run with it, and we don't have any control over it. It'll go back in there. Hi to everybody coming on. Dawn, I'm Ryan Goldberg.
Hey, Ryan, nice to meet you.
Everybody's probably talked a lot of trash about me. I'm really a good guy, I promise. We're talking about appraisals, by the way. So now it's just a round robin. It gets picked. We get whoever gets assigned to the order goes out there. I mean, the appraisals, the way that they're done is by comparable sales. It's all about comparable sales, and all they can do is use what they have available to be able to appraise a property. There's actually three different ways that they do it, and there's only one way that we allow or that we use on the actual mortgage real estate transaction to be able to use for the value. The two common ways are the cost approach and then comparable sale approach. So the comparable sale approach, obviously, what's selling in the neighborhood, the exact same property or a cookie cutter image of this property down the street sold for this much, one down the street sold for this much. This house has these upgrades. This house has this much square footage compared to those. We can compare them and we can come up with a value.
Everybody has seen this. We use this. Well, hopefully everybody has seen this. The these appraisal adjustments. This is like basically what Ryan's talking about. And we use this value worksheet here to price the listings, right? And these are great. I've used them to show appraisers. So everybody has seen this, but this is what Ryan's talking about for the comparable sales approach. Essentially, this is like a mini appraisal.
I've never seen that before, by the way. Actually, that'd be cool if you could share it with me.
Yeah, no problem. Yeah, so it's helpful because we try and look at these listings and price them like and how an appraiser is going to look at it, because it's likely the buyer's going to have financing. So
did you have you guys looked at an actual, has anybody seen, I don't know,
I'll make you bring it up.
Yeah, I was gonna say, have you seen an appraisal and see what it looks like or no?
No, that would be great. Let's do that.
Cool.
I just made you host so you can screen share.
I could have shared my screen anyway. I think it would allow me to, but let me go pull one up. Hold on one sec.
That's from when I sold my own homes and we got an appraisal. We've seen those. I mean,
Well, when you sell your house, you don't get an appraisal.
all right.
When you
then
buy-
I
when you-
bought the
when-
house.
When you
sorry.
bought your house, you definitely got an appraisal.
I had one done a few years ago, so I've seen one before.
Okay, cool. So you have an idea. I'll pull one up just for those who haven't seen one, just so they can see what it looks like. There's not a whole lot of fun to it. There's not, I mean, it's a lot of pages of numbers and remarks.
It's like another home inspection with all of these numbers, all of these pages, all of this junk, and we only care about one single thing.
Yep. What's the number
What
on
is the number?
Yeah, it's terrible.
Jimmy, can you send us that Excel sheet?
I can send it to everybody but you.
Oh no! Hey!
That's
You share that with Brit.
All right, Ryan, you were throwing darts at my head before you got on here, so I'm
You
in a little
missed
bit of
it.
a mood right now. Yes, I'll send it. I'm actually going to send it right now, so I don't forget while Ryan's pulling that up.
Thank you.
Trying to find one. Hi, Britt.
Hi.
Oh, thanks. Enthusiastic. All right, I'm gonna have to go pull one out of a live deal here. Give me a sec.
So, I mean, this whole conversation about appraisals is just insanely important right now for buyers and for sellers. It's just setting those expectations and understanding exactly what's going to happen if and when that appraisal comes in low. And one of the things that a lot of people ask, Ryan, is like, or that I talk about is I'm like 90% sure that there's been multiple listings that I've had where the appraiser doesn't step foot in the property even though they're supposed to.
We're going to talk about that too, actually, in a second. All right, here you go. I'm going to share my screen. And can you see it now or no?
Yep.
Cool. So like this is the first page of an appraisal. Beautiful picture of the property. This one actually just closed up in North Jersey today. And then it just goes on to be really in-depth details about the property, about the area. Things you see are like fee simple. Have you guys talked about fee simple or no?
Yeah.
Okay. So you guys are aware of that. Gives some dates, gives the address, takes the appraiser's name is in only a couple of spots. It's on the first page and then I believe the last page with their certificate. They sign it as well. They give you comps, they give you pictures of the property as well. I always, if I'm looking at an appraisal, it's the only thing that I ever kind of look at is I go look at the pictures on the appraisal and see if there's anything that's getting called for. So for example, like this was an FHA transaction. FHA compared to, there's three main types of loan, well, two main types of loans. There's FHA and there's conventional, or government loans and then conventional loans. Government loans are FHA, VA, USDA. Those loans are looked at a little bit more in depth. This is actually not an appraisal, by the way. This is just a re-inspection. Let me go get the actual one here. Hold on one second. Britt, you mind if I pull up Dan's, Britt?
Yeah, that's fine.
Cool. No, not that one. This one here.
Wow, my fate.
What's up?
My icons are on your desktop.
Are they really? Oh yeah, because I just did that. All right, so here's the real appraisal. This one's not an FHA loan. This is a conventional loan. The reason that I was bringing that up is because FHA appraisers are looking for certain things that that need to be on an actual appraisal, like the standard of the house. There's certain items that they're looking for. Biggest thing that you hear about on FHA appraisals is, oh, the windows, they have paint that is chipping off. That needs to be scraped and repainted. Why that's important? Honestly, it doesn't make any sense to me. I don't think there's any real importance to the scraping and repainting of the windowsills, but the biggest concern was for lead-based paint back in the day. And so lead-based paint was a big issue. They don't want any children crawling around and grabbing hold of a windowsill and gnawing down on it, because they could have some serious issues. And if an appraiser doesn't catch that, it's a liability that can come back onto the appraiser. Another thing that they call for on FHA and VA appraisals is railings on stairs. So actually, you know what? Do I have that one? Yeah, this is a really good one to look at. We're gonna look at this one.
So why do, and this is a question you're probably not going to be able to answer, but why do appraisers care about FHA buyers and not about conventional buyers?
It's a great question. The difference is really just the type of loan and who backs the loan. So FHA loans are government-backed loans. The government is insuring with mortgage insurance that property. And so they look at that property and they want to make sure that it's meeting what the government's idea of a habitable home is. They want to make sure that it's habitable. Conventional loans are privately insured loans. That's why the difference is, with a FHA, you have what's called MIP, mortgage insurance premiums. And with conventional loans, you have what's called PMI, which is private mortgage insurance. So the big difference is just where we get that mortgage insurance from. Private mortgage insurance is from a third-party company that the mortgage company goes out and gets the mortgage insurance for the client. And MIP is a mortgage insurance premium, where the FHA, the government says, you're approved for the mortgage, you're approved for the mortgage insurance from the government. We'll insure up to a certain percentage, which, by the way, mortgage insurance does not protect anybody, any buyer. All it protects is the mortgage company. Or if you default on the loan at all, they cover up to a certain portion of that mortgage for the lender. So I brought this one up because these are things that on an FHA mortgage would totally get called for. I'm scrolling through this pretty fast, but this is all
This
really
is an appraisal. This is how many documents, 47 pages.
Yeah. So you can see it's a lot. The first few pages, so like this page is kind of garbage. This one just shows the picture of the property. You've got an index. This is a useless page as well. And this is where the real appraisal starts. So you've got the client's name, which I probably should have blanked out, but whatever. It's my sister-in-law. This is gives you more specifics about the property. Down here, it tells you the conditions of the property. Second page is where you get to the nitty gritty.
Well, actually, if you go back up to that last page, I usually read this because this is written by the appraiser. Like that paragraph under describe the condition.
Oh, right here.
Yeah, like the appraiser writes that. So I always think it's interesting to read that, right?
Yeah, for sure. I mean, it's definitely nice to see, because look, we're obviously, the appraiser is out there to make the mortgage company feel more comfortable about lending against this property, right? You guys don't own the home as a buyer, you own the loan that we give you, and we want to make sure that our collateral is worth what we're giving you the money for. So yeah, this page right here is it's a big page. I mean, it's an important page. We want to know that this house is really in good shape, or is it like falling over? I don't really necessarily agree with the appraiser on this one, because he says that the property overall was not well maintained. And I apologize. I do agree with the appraiser on this one, because as you see, we'll get to the pictures in a minute, but it's definitely a falling apart house and not in great shape. But this is a refinance, not a purchase. And you'll see, like, if it was a purchase, over here you would have your sale price, you'd have the square footage of the subject property.
This is our value worksheet right here.
Exactly. This is your value worksheet. What the Excel spreadsheet that you were just looking at, I'm assuming you're talking about, right?
Mm-hmm.
Yeah.
Okay. So you see comp 1 tells you about it. Over here, you'll see adjustments for that comp one, minus 3,000, minus 2,500. So minus 3,000. There are a lot of abbreviations in the mortgage world as well. Heating and cooling system. So minus 3,000 because they have an outdated heating system or cooling system. There's no garage on the subject property. So this comp had a garage, minus $2,500 for that. And then the total adjustments down here. Same thing over here on the second one and the third one, so on and so forth. Over here's square footage, basement, finished grade, finished rooms, below grade. But so this is not an FHA mortgage. This is actually a conventional loan. It's on an investment property, and you'll see if it was an FHA mortgage, all the way down here at the bottom. Well, here you go. This lists them. Sale comparables, comments, final analysis. So this is telling us right here, the report is subject to the following repairs. Front exterior, Trek stairs, and I'll show you pictures in a minute. But like all of these things are falling apart on the house and it's not maintained. It's just trash. And so they're saying these all need to be done. And this is on a conventional loan. Remember, I told you that. So it's not just on FHA loans, but FHA would have been more strict with the repairs that were being called for. This is just on a conventional loan. So this is actually pretty nice on a conventional loan. The house itself really needs a lot of work. It doesn't look like it so much from this picture, but this backyard, these right here are the steps going to the back of the house. It's like falling apart. They got a chicken coop going on over here. I mean, it's in rough shape. Just an example. I mean, you can see there's some tough living going on in this house.
But go back to those repairs. I mean, now that we've seen these pictures.
Well, hold on, wait. I'm going to show you the repairs. So not only do they list the repairs, but they also come back down here and they show you pictures of the repairs that need to be done. So like, for example, this appraiser went to the extent of showing water stains falling in a drop ceiling, water stains in the ceiling, but it's saying, hey, listen, there was a flashing issue. Client says it's fine. We're in good shape. Got a front wall, retaining wall has separation. They actually called for this in the, hold on. So that front wall, here you go. No. Front retaining wall where there is a large separation, crack must be masonry repaired and somehow anchored to secure from future movement if possible. That's this house. That's this wall we were talking about. This wall has nothing to do with the structure of the home, but it's a structure wall on the front of the house. It's it's in the garden bed of the house. So to the appraiser, it was an issue. He wanted to be called. He wanted to be fixed up properly by a masonry. And a lot of times these repairs have to be done by a licensed contractor or a licensed engineer to sign off on it, because the appraiser doesn't want it falling back on their shoulders either. Here's more examples. Steps and railings are a very big issue on appraisers, especially on FHA appraisals. This is not up to par for an FHA transaction at all. They would call for this all to be ripped down completely and rebuilt back up with something that was up to code. This right here is falling apart. These wood, and the real big part of it is the safety end of it all. A child could lean up against this and fall over, and it would be, it'd be a lawsuit, insurance claim, the whole nine. And then that hurts the appraiser as well, or the mortgage company as well, because they might not be making those payments while they're not living in the house, or whatever the case might be. So that's just showing you some ideas of like repairs that need to be done to a property.
Conventional loan. So
yep, and on conventional loans too. So don't just expect it to be on FHA or conventional. Now, this property, it was an investment property. It was actually they put these repairs down on the list on the appraisal to be done, but we were actually able to make an exception and not have them completed because it's a conventional loan. So what we did was we went back and we said that we were going to reduce the value because we didn't need as much value on the house. It only had a small loan amount on it, and they stopped it. They were able to pull it back and say, okay, we'll just drop the value. The loan to value is still good enough for us to be able to do the loan, and we're good, and it dropped it down. So some instances will allow us to do that. Not all.
Not FHA.
Not FHA, only on conventional loans. So as a realtor, you guys are the eyes and the ears for us on the property as well. We rely on you. I'm not looking up. I'm not going out and seeing every house. We expect that you guys are going to be doing that and helping us out, because again, without you, it's up to the appraiser, and they're the last people that we want to leave it up to, because it could come back and be real bad. I mean, it could be, there could be a lot of things that you don't notice or that you don't tell us about, and then the appraiser finds it and it could just kill the deal completely.
It goes back to talking about when sellers are like, well, what do I need to do to get my house ready to list? These things, and really nothing else in this market. And either do these things, these major issues that are going to come up during appraisal, or don't do them, and make sure that you put it on the buyer if the seller's not going to be willing to do those repairs, to make the buyer take care of those issues prior to closing, because the appraisal issues are not negotiable. They're mandatory on 99% of the time. I mean, 100% of the time on FHA, but 99% of the time conventional.
So another thing that we should probably talk about is, and it's something very fairly new. It hasn't been around for too often. The last year or so, COVID really brought it out. Was appraisal waivers, or we call PIWs, property inspection waivers. They're huge in this market. I can tell you, on like the last 5 deals I think I just turned in this week, they were I think 3 of them had property inspection waivers. So basically what happens is this: with a property inspection waiver, how do we get it? Who gets it? How do we get it? And how is it useful? So first of all, the mortgage company who runs the client through their system, we all run our clients through the same underwriting systems. Before we submit it into our actual underwriters, we run them all through what's called Desktop Underwriter, or DU.
And any mortgage company.
Every mortgage company does this. Or LP, Loan Processor. Those 2 systems are basically a way for me. So I get all the client's information. I put, they fill out an application for me. I review the numbers with them, make sure that their income is really what their income is, make sure that their assets are really what they put down on the application, make sure the credits, look at the credit history, look at the credit scores, all of that good stuff. And then I submit this through Desktop Underwriter, or LP, DU or LP. DU or LP will come back with, hey, your loan is approved. It's eligible for financing. And then it'll also let us know if there's any property inspection waivers, or if we can do things like a D1C, day one certainty, so their income is standard income. It's they're a U.S. Postal Service man or woman, and their income is easily knowledgeable online for us to find. Great. Then we can waive having to get income verifications. They can tie their assets to our account, and we have bank statements that we can pull, and that's really all that we'll have to end up doing at that point. Sometimes they'll ask for a pay stub as well on those, but not often. So D or LP is the king or queen. We look at that for all the answers. If that comes back and says property inspection waiver, great, we run with that. Most of the time clients will take that and say, yeah, I don't want to find out the value. I already know I'm overpaying for this house in this market right now. Just state the value, and then I'm good. We'll go ahead and move forward. Typically happens with clients putting down 20% or more. Occasionally I've seen some with 10% down, but not too often. When there's mortgage insurance that's involved, it's not too often. On refinances, a cash out refinance, not going to happen most of the time. But a rate and term refinance happens often. We can state the value of the properties pretty often.
So take a step back and just explaining this to our clients, like at year 5, right? So basically what Ryan's talking about is this term that everybody here knows I hate, which is appraisal waiver.
Why do you hate it?
Well, listen, because I hate the way that agents use it. I hate when agents make an offer and they say that my buyer is FHA 5% down and they're waiving appraisal, because you can't waive an appraisal. But what Ryan's talking about is in some cases where you have a very strong buyer, or a property where it's got a lot of comps, or it's a lower price for an area where the values are higher, when they run these numbers through the system, it can spit out an inspection waiver, and essentially there is no appraisal needed on the property at all. But it only, I mean, it generally happens with people that are putting 20% or more down conventional, or at least 10%. It's more rare. I've never seen one for 10%. I've seen them occasionally for 20% down buyers.
Yeah. So,
And it's a chance. And is there any way for us to know upfront that that's going to happen before we make an offer?
No.
Jim, do you, and I don't want to, I'm going to tiptoe around this because I don't want to bring it up if you don't want me to bring it up. But do you talk about like the no-nos of things to do in the real estate world? Like the real bad things that you shouldn't do, that people are doing that we should not get accustomed to?
One of the things that I was going to bring up that we were actually, Sam Laporte posted about this today, but we've been talking and seeing it a lot more, is raising the listing price in Bright after you go under contract to the contract price, to essentially trick the appraiser into thinking that we're under contract.
No, I wasn't talking about that too much. I was more so talking, well, so I mean that's a bad thing to do, but I'll be honest with you. We tell people often to not do that. Sorry. So I had to stand up, my knees are cramping up on me. So a lot of the times, but we do that often. We tell people to go ahead and throw it into a adjust the price, because I mean, look, the appraiser is going to come into the value that they need to come in at regardless, right? They're going to come in at what they think the value of the property is. And you guys should know this about appraisals. It is an opinion. It is only an opinion of one person. Now, they're an educated, licensed appraiser, so they do know what they're talking about, but it's an opinion. And so opinions, we all know what opinions are like, right? I mean, we all know what opinions are like. Jim's got a great opinion of me. He thinks I am handsome and charming, and if I wasn't married, he'd be going after me. And I think I value his opinion.
And my mouse over your mute button.
Oh, I'm sorry. You can't mute me, can you? Am I still I know you took it away. So the reason I bring that up is because opinions, right, can be. Oh, I didn't see questions in here. Can a first-time home buyer program with down payment assistance? Not going to happen ever.
What's the question?
The question was, can a first-time home buyer program with down payment assistance waive an appraisal? Nah, it's not going to happen. Never will happen. And the reason it won't happen is because there's just not enough skin in the game on that type of a loan.
Are you trying to say that opinions can be interpreted differently, Ryan?
That's exactly what well, not Jim's opinion of me, but yes, other opinions can be interpreted differently.
So what does
that mean practically?
Yeah, so I'll get back to that. So that's where I was going with it. So a lot of times, I shouldn't say a lot of times, it doesn't happen too often, but an appraisal will come in low, right? So we're under contract at 500 million. And the appraisal comes in at 400 million. That's a big difference. All right. Obviously, I'm just using stupid numbers that we probably won't see in New Jersey for a long time. But the point is that if the appraiser comes in at a low value, and we meaning me, you, your buyers, more importantly, your buyers, and the listing agents and the sellers feel like the value is higher and the value should be much closer, you guys can do what's called an appeal of the appraisal. Are we often lucky with these appeals? Not always, but I've had my fair share of appeals that I've won. And so what that means is, the appraiser thought the value was here. We feel like the value might not be at our sale price at 500 million, but we think that we could be 450, And so what happens there is the listing agent, typically the listing agent, right, Jim?
Yeah, depends on the situation, but yeah.
Okay, majority of the time we should ask the listing agent, because the listing agent is the one who in this market, the listing agent doesn't make the price, the buyers make the price, but in a normal market, the listing agent has a listing price, right? And we usually get under contract that listing price, and then we move forward from there. So if the value doesn't come in at least at the listing price, that realtor should have some comps or something to back up their opinion of the value of that house. You can't just go to a house and say, this is $1 million house. Let's list it for $1 million. You know, you have to have some backing behind that. And so if the value comes in low, you can appeal it with with other comps that the appraiser might not have used in the appraisal. Is that helpful?
Yeah, so I'm assuming everybody knows that if an appraisal comes in low, you can fight it, basically. Now, what about if you fight it and the appraiser doesn't increase the appraised value? When can you throw out an appraisal and order a new one?
Is that a question for me?
Yeah, I guess. I mean, this just happened, not in this group, but.
So, well, first of all, FHA appraisals and VA appraisals. I love this, how you set me up and I can like spike it down. It's cool. VA and FHA appraisals are appraisals that stick with a property for 6 months. They don't go away. You get a low value, you're stuck. It's not going anywhere. Any other VA or FHA buyers that come in to buy the property after that first buyer came in and had a low value, they have to use that same appraisal. We have to get it moved over to their name. So you're not selling it for any more than what that appraisal came in at. Conventional loans, you guys don't like the value, buyer and seller agree to cancel the contracts, goes away, drops off, doesn't stick to the property at all. A new conventional buyer can come in with a better mortgage company and have another appraiser who has a different opinion of the value come in and change the value.
So that segues into another question. So explain what happens on your end. So what super common, more, you know, the right way, in my opinion, you know, is, and everybody's got an opinion, but the right way to waive an appraisal is to put a cap on how much the buyer is willing to spend out of pocket if it comes in low. I mean, we're seeing this on almost every offer right now. If a buyer can do it, they're doing it. So on your end, if you have a property realistically priced for under contract at 250 and appraisal comes in at 230, the buyer said they're willing to cover $10,000 in the difference of a low appraisal, what happens on your end?
We yell at the buyer and tell them they're idiots and they shouldn't buy this house. No, we have to take that into consideration. So the buyer has to have enough money to be able to cover that down payment, the closing costs, as well as the difference in any appraised value. So, you know, if the house comes in $10,000 under, the buyer has to understand they're coming to the table with the 10,000 plus their, you know, 3% down, 3.5%, 5%, 20% plus the closing cost.
So what does it look like if that happens? If the appraisal comes in at 230 and the buyer puts 10.
So if a buyer was sorry, I didn't mean to cut you off, but if a buyer was putting, like, let's say a buyer was putting 20% down, the appraisal comes in low by $10,000. And so they're like, okay, well, I can still cover that $10,000, but I just won't be putting 20% down anymore. Well, that changes the whole structure of a loan. You know, now that mortgage is going to have to get mortgage insurance. You know, now we have to underwrite that loan with a little bit different mindset. You know, it's not a house that we know we're starting out with as much equity anymore. Interest rates change on those. You know, now 20% down to a 10% down or 15% down changes in interest rate. Doesn't change your closing costs, but changes your interest rates. Could change your interest rates. And you know, we you know, that also eats into the reserves that you have, which makes you a stronger buyer as well sometimes. So there's a lot that it can change.
I mean, in the event you had, go ahead, Dawn.
So what you're saying, Jimmy, is if they want to do another 10,000 and it comes to that, instead of just keeping the mortgage exactly the same and just paying 10,000 cash, you're saying this buyer might want to renegotiate the mortgage. Is what you're saying. It has to be re-underwritten.
There were different ways to handle it.
Uh-huh.
There's a lot of,
So-
and there's a lot of different, I mean, like, it's really, every scenario is unique in itself, because some buyers might want to cover the difference plus keep their down payment the same. Some buyers might want to put less down and not spend that much money out of pocket.
Can I ask one quick question with the offer? So if you're going to do that and say, okay, I'm going to do 10. So for proof of funds, because I have somebody that I'm kind of working with the same thing. Like I told them, you need to get a letter from your bank, or you need, like, would you accept for an offer? Like the bank statement of that day that they have the money, or does it have to be like a letter, like you get a pre-approval letter, like if you're using extra cash?
I get it. So I'll answer
Okay.
that. So when we have listings and we're getting these offers where buyers are saying they're going to cover X amount of difference in a low appraisal, for example, 20,000, or for example, somebody, I don't know if you're in here, had somebody that just said, we'll cover it. They didn't give a value for it. Then my suggestion to the listing agent is text or call the lender and text or call the buyer's agent and say, we need to confirm, I need in writing that the buyer has the assets to cover the low appraisal. And I want that to come from the lender. They don't necessarily need to go and get you a bank statement showing you how much is in their IRA, but to
Okay.
at least have an email from the lender that says, yes, if appraisal comes in low, they have sufficient assets to cover the $10,000 difference in a low appraisal.
So the mortgage company that they're going to work with, you ask them to say that they have the funds.
As a listing agent, you're going to get a pre-approval and a proposal to purchase. So find the Ryan Goldberg's cell phone number on the pre-approval and give that loan officer a call.
The pre-approval person. Okay, thank you.
Mhm. Yep.
So I was going to bring up the no-nos that I'm seeing, and I strongly.
Yeah, absolutely. What are some common no-nos that you're seeing that we
Well,
should
it's not
look
a
out
common.
for?
It's not a common no-no, but it's something that I'm seeing in Philadelphia more than in Jersey right now. But I cannot wrap my head around why any seasoned realtor would think this is a good thing to do. But they're doing it, and I really hope you guys don't do this, because it could really put you and your buyer in a really bad position. A lot of buyers agents are putting in offers, and they realize that, man, we're not getting any of our offers accepted with a pre-approval letter. Every other buyer that's coming in is winning with a cash offer. And so a lot of times, talking about PIWs, property inspection waivers, right? When there's no issue with value whatsoever, you've got this strong buyer, and I can tell you, hey, it doesn't need a waiver. I mean, it doesn't need an appraisal. It's got a waiver. The buyer's agent's putting in an offer as an all cash offer. They're saying, this is all cash offer. Here you go, 300,000. And they're getting their offer accepted because it looks like it's a cash offer. Problem is that it's not a cash offer because we're still doing financing. And so we'll get the contracts and start the process of things. And my first thing that I do when I get under contract, or not all the time, I started doing it more often than not now, is I reach out to all the parties and let everybody know who I am. Hey, I'm Ryan. Landon and Bob are on my team. They're going to be reaching out. They're going to be part of this whole transaction. Just want to introduce us, give you our contact info. And
So wait, I don't want to interrupt your story, but I'm going to anyway.
Go ahead.
What Ryan just said there is huge. That is like so huge in this market that you can tell the listing agent to call Ryan, or tell Ryan, hey, we just made an offer. We know we're in the running. Can you give the listing agent a call? Let the agent know how strong our buyer is. Sell our buyer for us. Ryan will do that. He does it even if you don't ask him to. 90% of lenders aren't doing that. And it really takes your offer up a notch or two. Because if you had another offer, if I am a listing agent and I got an offer 3,000 higher that was poorly put together, and I don't know who the lender is, it's from Bank of America corporate, and then I got one for 3,000 lower, and the lender, who I don't know, is a local lender and calls me, introduces himself, and speaks on behalf of his client, you bet I'm going to be telling my clients, my sellers, take the lower offer.
Yeah, and there's something that so a lot of times you find in this business, you guys will work with people. You'll work with seasoned realtors. You'll work with brand new agents, just like yourselves. Adapt to the market. Adapt to the real estate market that we're in, and always be changing. Not just closing. Always be changing. If you see something that you think looks really good, talk to Jim about it and adapt that into your repertoire, So 16 years in the business, I'm still learning things every single day. I was never a really big Instagram poster, Facebook poster. I would do it here and there. Guys in my office are like, you got to do it every day. You got to do a post every day. You got to let people see that you're doing business. If they don't know you're doing business, they're not going to remember you. It's going to be in one ear, out the other. So, I adjust, I adapt. Something else that I did that I just started adapting to was sending in a strong buyer email to the listing agent. So Colin, you're on the call. We just did this the other day. Colin put an offer in. I said, hey, Colin, copy me on your offer. Make sure that I'm on there. I'm going to reply back with this blanket just email saying how strong of a buyer these buyers are. I mean, these buyers are FHA buyers. We know that they're not always the strongest buyer, but we can portray to the listing agent, hey, look, this buyer has assets. They're going FHA for a reason, credit, whatever the reason, but they're going FHA. Doesn't make them a weak buyer. Yeah, they decided that they would waive $10,000 for the value. They have that money. I can confirm it. Put me, your lender, whether it's me or somebody else, hopefully it's me, but put them on the offer letters, email, because it can really help to just project your client to the top. I've had 3 or 4.
Hey, Ryan,
yeah,
not to interrupt.
Go for it.
But yeah, that actually, I hung up when I heard my name. I'm sorry. No, that was great. I appreciate that. I think that really, I think that was great. There was a couple offers that I put together that I received for the house that I had listed, and not one of the offers that I fielded for my client was there anything even like that. Yeah, so it's unique.
It's new. It's new.
Oh, it's new. Oh, okay.
This is not something. This is not something I've been doing for years. This is something I just started doing 3 weeks ago. One of my top agents that I work with, she closes like $15 to $20 million a year in business. She said, hey, Ryan, I had a client who was working with this no-name company that I've never worked before. The lender called me up after I emailed the lender for their pre-approval letter, she called me up and she said, hey, do me a favor, copy me on this email. This top producing agent said to me, hey, Ryan, you should be doing this. This is helpful for you. This is going to make you stand out above everybody else. Do it. And of course I do it. I bring it back to everybody in my team, everybody at GR. I'm like, guys, we got to be doing this. This is going to make us stand out above everybody else. And lo and behold, 10 other loan officers that I work with were already doing this. So, they just didn't bring it back to me to share with me, but it's good to share things and help each other. You guys have to look at yourselves almost like a little family, really, within KW, because you guys all are starting right around the same time. Help each other out, learn from each other.
Yeah, I mean, KW is like that. I don't know another office that has calls just like these, but I just want to harp on this one more time. I mean, when you see these offers, you see my emails with the bullet points, with the attachments, everything in one nice, well put together email with the subject line. This isn't an accident. This is on purpose. This is so that when Tawana, who I know wants to ask a question, makes an offer and doesn't get accepted, you can at least know that you advocated for your clients, and you're going to get an email from the agent afterward that says that offer was really professional and well put together, and that you're not just going to get ignored like the other 8 agents that made an offer. So, Tawana, you want to ask your question?
Yes, I'm dealing with potential buyers, but they're not sure. They're actually Pennsylvania residents, but they're not sure if they want to buy in Jersey or PA. I'm just curious to know, because I just found out the other day they have not been pre-approved. Can I still talk to someone in New Jersey about getting them pre-approved, or does it have to be in Pennsylvania, wherever they purchase their home?
That's a great question. So when I worked at Citizens Bank had me what's called federally chartered. That means that I can write a loan in any state that the bank writes loans in, which was every state. And I was able to write any loans, and I could talk to any client. Coming out of the banking world and back into the mortgage world, every single email that I send out has on the bottom of it, state's license, my state license number in Delaware, my state license number in New Jersey, my state license number in PA, in Virginia, soon to be Georgia, soon to be Florida, soon to be New York. I am going to getting all of my licensing back. And yes, you can talk to, we lost Tawana. Oh.
No, we didn't. She's here.
Oh, okay.
She just muted herself, so she moved down the thing.
Just put my hand down. I'm here.
No. Okay. So I didn't see you. Sorry. So yes, the answer is yes. I can still talk to them, any lender can still talk to them. Are we supposed to be quoting them rates in states that we're not licensed in? We are not supposed to be quoting them rates or fees in any state that we're not licensed in.
I can speak on behalf of Ryan, knows the Philly market very well. I don't know what your percentage of business over there is now, but I'm dually licensed. So that's another perk of having Ryan do the pre-approval. He's good in both states, knows the transfer taxes in Philadelphia County and all that kind of fun stuff. So
yeah, so the short answer is yes, I can help you out over there if you'd like. You can have me talk to them as well.
Okay.
If I'm not, though, just so you guys know, I can write a loan in any single state. We have what's called a DLO desk, a designated loan officer desk. And what that means is if you refer a client to my website, which is the best way to do it, because I'm not supposed to push them to my website. If I know that they're buying in a state that I'm not licensed in, you guys can send them to my website, and I get tagged as the process manager on that client. Like if they're buying in Hawaii or in South Carolina and I'm not licensed there, it'll get sent to what's called our designated loan officer desk. A loan officer will look at the file, they'll prepare the file, they'll tell me what the quotes are, and then I'll tell them, hey, look, this is a referral from a really good source. I need to make sure we take really good care of them. And then I get put on there as a process manager and run it all.
So you mentioned talking about this, that you were at Citizens and you were in the banking world and you were licensed in all 50 states or whatever, and now you're back at a mortgage company. So explain to us the difference between banks. Why is Citizens a bank and Guaranteed Rate is different?
So the majority of my career was in a broker, a mortgage company world, Trident, right? Where you're individually state licensed in each state that you're going to get licensed in. When I was at Trident, I had New Jersey. Funny story about Ryan is that I am terrible at test taking. I have lots of knowledge in the mortgage world, but I am horrible when I'm put under the gun and I'm told, pass this test. I failed. You take a test 4 times. Back in the day when I was getting licensed, every state, you take one big national test and then you take individual state tests. They don't do it like this anymore, but you get 4 tries to pass the state test. And I failed Pennsylvania 4 times. And I said, you know what? The hell with Philly. I don't like it. I don't do business in there anyway because I'm over in Jersey. Screw it. I give up on it. It wasn't until I went back into the banking world 5 years ago, 4.5 years ago, and I said, I like Philly. I like Philly a lot. I want to do more over there, and started working there again and started doing more stuff over there. The big difference is licensing. When you work for a bank, man, you can get away with murder sometimes. I mean, they are federally chartered, so they're not looked at by the CFPB quite the same way as a mortgage company would be.
Okay, so I'm going to break this down because this is important as well. Ryan does a lot of co-branded marketing stuff, and if I'm not mistaken, what Ryan's getting at is Guaranteed Rate comes under the gun. They look at the little guy like Guaranteed Rate. Citizens Bank does not care enough to bother with checking Ryan's compliance and stuff. So when you're doing co-branding and stuff like that, you can do that with Guaranteed Rate or any lender. You're supposed to be, compliant. There are rules that you have to do. I don't really feel like getting into now, but
no.
But other than that, you would say for your buyers getting a pre-approval, bank versus Guaranteed Rate.
Yeah.
Difference.
A world of difference.
Why is that?
I have a comment.
Sure.
Yep.
I just wanted to say my buyers have been dealing with Bank of America, and it's actually the reason why I reached out to Ryan is because the communication has been lacking with their lender. So, to try to make things better and have them get the customer service they deserve, I reached out to Ryan. So
yeah, so from an individual loan officer perspective, when you're dealing with a loan officer that Jim can attest this as well. I know it doesn't really mean the same because Jim's brought me in here, and so might not feel as authentic, but I think Jim would agree with this. It's all about the person that you pair yourself with, right? So like a loan officer at a bank who is a burn and turn is what we call them, takes a loan application in, approves it, gives a pre-approval letter, throws it away and stops dealing with it. They move on. You got a pre-approval letter for them. Client can get under contract, but they're not following up with you. They're not following up with the client. They're not seeing if you're putting offers in. They're not helping to run numbers. They're not doing all of the really important things that a loan officer should do for you as a realtor, number one, and then for the client, really, number one. It's
and
important.
really, as new agents, especially, we talk about this a lot. Hey, my client wants to put 3% down. How much are closing costs? Who goes over closing costs with them? A good lender, all of the lenders that I work with are doing that. They're going over the closing costs with the buyer. They're making sure they've got the money. They're making sure they understand what their payment's going to be on the property they're looking at. They're making sure they understand everything that goes into getting the mortgage. If you just let them go on to quickenloans.com, they are not going to get that level of service. And you can bet that there's going to be a look of shock on their face when they see the closing disclosure and there's $8,000 in closing costs they weren't prepared for. So it's just another layer of protection for yourself. And now I don't need to worry. I know if I give a buyer to Ryan or any good lender that I work with, he's going to cover taking care of the closing costs. I don't need to waste my time on it. I can go out, lead gen, get another client and do some more business.
Yeah. So yeah, the biggest thing is just communication. Communication. I can't stress it enough. My wife hates this, but I am always working. I had a client text me at 11 o'clock at night 2 days ago and say, the first line of the message was, "This is for tomorrow. Don't look at this now." Right. And then it said later, it said, "I need 2 pre-approval letters, one for 460 and one for 465. And if you could just let me know what the payments are going to be, that would be awesome." Right. And so any other lender, I can promise you, at 11 o'clock at night, I don't think there's many lenders that would stop what they're doing, watching a TV show, laying in bed, which is what I was doing, getting ready for sleep, and then drop everything and go down and look at their computer and do everything that they asked me to do. I am married to my work, not just my wife, but my work. I am a sole income for the family. I have 3 little girls. I have a beautiful wife and 3 beautiful girls, and I need to provide for them. And this is how I do it. So my wife gets it. She hates it, but she gets it because she knows that this is what continues to get more referrals and more realtors to want to work with me, and people like that. So that's just a little tidbit about me, a little bit more about myself. I am above and beyond for what you're looking for. I can promise you, you're not going to get a service that's going to be close to me, I don't think, in my opinion.
So yeah, I mean, that just goes back to why that is one of the big reasons why I recommend Ryan, is because I know as new agents, I remember being there. I'm still there. I'm still in the no sleep zone. Ashley can attest to that, right? I like that. I know you guys can get a hold of him at 8 o'clock at night if you need it for a pre-approval. I know that he'll be there if he can to answer you. So yeah, I've
already worked with a bunch of you already, and I think you might not have seen it, or maybe you have seen it, but Jeanette, I love your questions.
Jeanette's
and
question,
thank you.
yes.
And thank you. I would love to help you out. Reach out to me. You have my contact info. If not, I'll shoot you. Jim can share my contact info with you as well.
One thing I want to.
Well, hold on real quick. I want to answer her question. She asked about first-time homebuyer programs, or like benefits, right? I think that was what the question was.
Yeah, down payment assistance programs. Yeah.
So the only one program that we have, banks, I won't lie, banks have a lot of great programs when it comes to first-time homebuyer loans. They have a down payment assistance program. Sometimes they offer that with no mortgage insurance, which is really strong, and it's like a very, very little amount down. We don't have that in the broker world. We don't have that in the mortgage world. The banks have them. We have an FHA first-time homebuyers loan that the state will give you up to $10,000 to use for your down payment and or closing costs. We have that. Most of the banks don't have that, which is funny. It's weird. They either have it or they don't. But listen, if can we do that product? Yes. Is it the best product that's out there? It might not be the best product for you. If you have money for your down payment, and you'd be surprised at where you can find that money sometimes. That's my job, is to find that money and help you find ways to get that money. You might be surprised. There might be better products for you. A conventional loan, you can get out of mortgage insurance after you hit a certain amount of equity in the property without having to refinance. It's a huge benefit to you as a homeowner. So Just a thought, just an idea. But yes, please give me a shout. I'd love to help you out.
So credit checks. Talk to us about the very beginning stages of pre-approvals. We run into this objection all the time. I don't want to get pre-approved right now. I don't want my credit to get hit. I got approved with Bank of America. I don't want to talk to your person because I don't want my credit to get hit again.
So Tawana, Tawana, I think we talked about it, or maybe it was Giovanna. I forget. I apologize. Talked to a lot of people every day, but about the 15-day rule. I think that I talked to one of you guys about that.
Yeah, we did talk about it.
Good. I thought it was you. So 15-day rule. Client applies with X company on today. 13 days later, they decide, I hate that guy. He never answers my questions. And you're like, I got this guy. This guy, Ryan, he's freaking awesome. He'll help you out. And boom, you guys connect me. If it's within that 15-day window from when the first lender ran the credit, it's not going to affect their credit score at all. FICO, Fair Isaac, gives them the ability to run their credit as many times in a 15-day window from when the first lender runs a credit, as many times as they would like without it affecting their scores. So it's a big, huge factor for you guys to know and be able to talk me up or your lender up to the clients to help them to be able to get them to talk to your lender. And having, I hate saying control, but having that control over the lender, over the client of what lender they work with, it is a game changer for you as a realtor, because then you have a lot more confidence in knowing that the deal is going to actually get to the table. I speak very freely with you as my partner, because you guys are my partners, in getting, like, letting you know what the strengths of the client are or what I'm nervous about. You know, Jim and I have closed a tough deal. I mean, we closed a really tough deal. I gave him a lead, actually. I gave him the lead. It was a deal that I said, look, I'm nervous, but I think I can get this deal done. Bear with me, work with me, know that it's going to be a bit of a bumpy road, but we're going to get there. And Jim had full confidence. You know, he's like, it's in your hands. I'm going to let you run with it. That is so important to have that relationship between you and your lender. It really is. But the credit checks. So what does it do? What does a credit check do? How does it affect you? Most of the time, it's about a 5 to 10 point hit on your credit check. So I run your credit for a mortgage. Your score is going to drop down from me checking your score slightly, 5 to 10 points. Those points that you lose, you're going to make that back up after about a month or two of making your payments back on time. It's really not that big of a deal. Everybody gets nervous about it. Everybody is worried about it. And truth of the matter is, when I look at your credit and I see what's on there, 9 times out of 10, I can give you pointers on what's going to help bring your score up even higher than where your score was at before I ran the score. So, you know, clients just aren't educated enough to know that. You guys shouldn't be having too much of that conversation because you're not licensed loan officers, but you guys can dabble a little bit with some of the things I just gave you to have them talk to me, and then I can go ahead and have that conversation with them.
So if a client waits 15 days, or let's say it's been 2 months and let's say they got approved with you today, and then 2 months from now they get an offer accepted, or they pause their search and they start it again. It's been 2 months. They need a new pre-approval. What's the credit issue? Is there one?
I mean, look, so I don't know if other lenders do this or not. I haven't talked to other lenders about this part of it. If I run a client's credit and I qualify them, and let's just say they have a 740 credit score, right? Which is, in our books, the best credit you can get. Anything below that starts to have adjustments to their interest rates, but anything above that doesn't get any better than that from our standpoint. So if I run a client and I run their credit, and 2 months later, they're like, you know what? We didn't find anything. Our mortgage pre-approval is up in another month. There's no way we're finding a house and closing in 30 days. We haven't even found a house yet. You know, our pre-approval is going to expire. What happens now, Ryan? I am telling the client, look, your credit score is great. I see that it's great. You're a very qualified buyer. I'm not going to just automatically run your credit right now. I'm going to let it expire. And if you need a pre-approval letter in another month or in another, 2 months now, I'm not going to repull your credit again. I will issue a pre-approval letter. I'll let you go ahead and make that offer, but just know that if you get under contract, I've got to go repull your credit then at that point. And you have to tell me if you've opened up anything new or if you've had any issues with your credit from when I ran it to now. Most other lenders might run the credit again before they issue a pre-approval letter. I don't know the answers to that, but I feel confident enough in the relationship I have with the clients, and that they're going to have an open conversation with me about that.
So anybody want to ask, I mean, anything else you wanted to harp on? It's been an hour. You were here earlier than I expected, so I'm not
Sorry.
expecting to go much longer. No, it's all good. So I'm not expecting to go much longer than this. So, I mean, if anybody can open up some questions, if anybody wants to ask anything specific, go for it.
Do you do doctor loans, physician loans?
So since COVID, we've lost our doctor's loan, but something tells me they're coming back fairly soon, actually. And you know what? I wouldn't let that hold you back from making a referral, because the doctor's loans are great, but we have other loans that we can structure that are just the same way. The biggest thing about a doctor's loan is that it's usually 5% down, no mortgage insurance. And that's the biggest helpful part of it all. We have products that are 5% down, no mortgage insurance, and you don't have to be a doctor to do it. There's lots of ways to get creative with the financing. So are you in a hospital? Is that where you're at?
I am a doctor, yeah. And my partner, my friend here, she got like 0% down and no mortgage insurance. Sometimes you can do 0% down, right, with the doctor's on.
We had that as well. We don't have that anymore, but we did have that as well. The banks are going to have those, and we didn't go in great detail about that, but the banking, the reason I'll be very frank, the reason I left the banking world is because the bank wasn't able to handle the transactions, my clients, the way that I needed them to in a timely manner. I had refinances and purchase transactions that were sitting around for, purchase, not so much purchase, but more so refinances that were sitting around for 6, 7, 8, 9 months and not closing. It's just not the service that I provide. I work hard to bring clients into my company. I want my company to be working just as hard for me when I bring that business in. So that was why I left. A lot of the companies that offer doctor's loans right now are banks. You just gotta, you gotta juggle that and whether or not.
You have something similar, you said.
Yeah, something similar. Yeah.
Okay.
Not 0% down though.
Yeah. All right. Well, 5%. Thanks.
No
So
problem.
Jeanette asked, clients purchasing a home as tenants in common, do they both need to work with the same lender?
I'm not sure I understand that question.
I mean, the answer would be yes to that question, although I think no matter how they purchase it, if two people are purchasing a property together, there's only going to be able to be one loan on the property unless you're taking out a second mortgage that would just be in one person's name.
Yeah,
perhaps. It sounds like a question that you'd have to give a lot more context on.
Yeah.
But solvable,
Okay,
answerable.
and that was my answer. If they purchase like co-owners or whatever, they would have, you said, there'll be one mortgage needed.
So
right?
great example, but my wife and I are married now. We bought our house together. We were not married. That's a super common thing that happens. Or, in that case, we're both going to live at the address. It's both going to be our primary residence. We're qualified just in the same as we would if we were married, but basically separately. We both had to give our income and assets and everything like that, just as if we were, we were married, if that makes sense.
Okay, so that'll be the same as if I was purchasing a home with my mother-in-law and she was living in the house with me. Will it just be one mortgage and with?
Yes, it would be one mortgage. Yes.
Okay.
Yes, but what if you're not going to make it your primary and you're not going to move into the house? What would you be considered then, Ryan? A co-applicant?
A non-occupying co-applicant.
Okay.
It's a big difference.
How does that affect? This happens now. We have people who are co-signing for parents, or usually that way around, parents that are co-signing on mortgages for. This is happening with Brittany right now. How does this affect rate and terms? What do they need to do for the co-signer?
So there's no difference between a non-occupying co-signer and an occupying co-signer. A lot of times people feel like, oh, well, I'm just going to co-sign for them. This won't affect my credit. This won't affect me in any way. Completely wrong. it will 100% affect you if that person does not pay their mortgage. Your credit score will be affected just like theirs would be. The big difference though that we can look at is on the credit report. So if you apply as a non-occupying cosigner, and if the mortgage company, and this is the biggest part, if the mortgage company lists you correctly on the loan application, which doesn't happen too often, you can go apply for another mortgage, and if it's listed on your credit report as a non-occupying cosigner, then it won't be counted as in your debt to income ratios. You can go and get bank statements or canceled checks to show that the other person has been paying that mortgage, and we don't have to count that debt against you.
That makes sense. Like that's good to know. So if a parent's co-signing and they're listed properly on the mortgage application as a non-occupying borrower, right?
Yep.
They could then go and move, and they would not have the monthly mortgage payment that they co-signed for counted against them, as long as the person who's living there has been paying the mortgage and they can prove it.
Correct.
So good to know, because we're trying to, any solution we can come up with, right? More and more I'm seeing like everybody, parents digging into retirement, whatever we can do to get somebody approved for a loan. So, and this isn't just another reason why you want to make sure you do it right from the jump. So anything else?
Well, I've had conversations already with a few of you. I look forward to talking to Zach, Ian, Joe, Jeanette, Dawn, Christina. I'd love to talk to you guys. Please, seriously, take my number. Even if you don't have a client, like if you just have like a question that pops up and it's something that pertains to mortgages, shoot me a text, give me a call. Just let me know who you are in the text message. I can't tell you how many times I get messages from people. Hey, what's the minimum credit score and how long does it take for you to close my loan? And I'm like, I'm sorry, who are you? I don't know who that is. I don't have your number saved. So just let me know who you are. Do you guys all, I don't know, did you share my contact info with all of them already before?
Yeah, but I will again. I'll drop it in the email.
Well, we're gonna see each other all very soon as well, I hope.
Oh, right. Yeah. So I think I told Ashley this last night, but I'll let everybody know. I mean, there's only 11 people in here, 10 agents in here right now. We're doing a happy hour at Ramblewood with Ryan Goldberg and Lisa Kelly from Foundation Title.
It's gonna be not a business like one though. We're not like, we just want to go have fun and get to meet you guys. If you have questions, we have no problem answering them, but for the most part, we just want to have you guys come and cut loose.
And that is on the 10th of the 10th of June, Thursday, 2 weeks from today. And I'll make sure I let everybody will get your typical text and email from me regarding that.
Cool.
So
Where's your office, Ryan? What town is your office in?
So I work out of our Marlton office, which is right on Route 73. But I also go to Philly as well once or twice a week. Most of the time, though, this is my office. Ooh,
Okay.
right here.
All right, but if we wanted to meet you in person or come in, you have an office in Marlton.
Absolutely.
Okay.
Yes. Or if you want to come to my house and throw darts at Jimmy's head, please be my guest. We aim right for the smack dab in the middle if you can get it.
really nice, really good stuff. I'm gonna who's your HR representative over there? Guaranteed Rate. I'm gonna send them an email.
I'll introduce. Actually, you know what? That's probably a conversation for another time. But we have a great marketing team over here. If you guys want to do any kind of flyers or mailers, she's awesome to work with. Makes life very easy for you. All you have to do is give your portion of the payment and we can go from there. But that's a whole nother talk about another day.
Yeah, definitely make sure everybody, generally is hitting me up for that kind of stuff. But, if you want to bring some of that knowledge to happy hour or whatever, we'll catch up on it. But
cool.
Thank you for coming on here. Appreciate it.
My pleasure. Yeah, thanks for having me.
Let me reclaim the host from you so it doesn't mess up my.
Oh, good.
No, I can't do it.
My pleasure. I'll talk to you soon.
Can you make me the host again?
Oh, you want me to give you the power right now? Is that what you're saying?
Yes, because for some reason my Zoom is bugging out pretty great.
I got you.
Ryan, if you have something that we could email to buyers, Just
Yeah,
can
like
you
like
send
a
something?
like a worksheet or something.
Yeah, something just to like give them like an overview of the home buying process. I think I'm probably thinking more about first time home buyers.
Yeah, so there's a lot. You know what? Do me a favor, Tawan, do you have my email address or no?
No, I don't.
I'm gonna put it in the chat real quick, and then you guys can copy and paste it out of there. Shoot
Ryan
me-
is also copied on both of those emails I sent today and
I was.
yesterday.
Yeah, it was. But just so you have it, I'll put it in the chat as well. Shoot me an email. Colin's not on the call anymore, right? Is he gone? I think he's gone. Colin's all, I think, who's gotten on this one. I think I might have sent Brittany. I could be wrong. But an invite to Agent Advantage. Agent Advantage is huge. It's a way for you guys to take advantage of our marketing, of my marketing team, and it's a way for you guys to be able to get flyers that we can email that are co-branded between the two of us. I know, whoa, Jimmy doesn't like that one.
Okay.
If there's no cost to it, it's not a big deal. The print marketing, I don't think there's a big deal to that. If you're mailing it and there's a cost to mailing it, then we have to split that cost 50-50. And I will pick up half of the tab and you guys will have to pick up your half of the tab if you want to do any mailers.
I want that info. I don't think I have it.
Brittany, I'm gonna send you an email right now because I know that you need to get on there.
Thank you.
It takes you, yeah, of course. It takes you a minute or two to create the account, like the profile, but it is so worth it once you get going. I have a lot of agents that use it. You go on there, you pick out if you want to do a mailer, you go on to the website. It's called Agent Advantage. I gotta find it again and then send it over to you guys. But you can just go on and take a screenshot of the flyer or the postcard or whatever it is that you want to mail, and you can email it over to myself, and then I'll introduce you to my marketing girl. Her name is Megan Greiser. She's awesome. And when I connect you guys, she basically takes it from there. You send her the one that you like. You already have your profile made up on our website. And it's going to take you a few minutes, though, like I said, but then you will be able to, you're able to go ahead and she's able to go ahead and run with it. She'll just basically create the flyer with your information, my information, whatever information you want on there, and, rent versus own or whatever the case may be, and tell us an address. We find the addresses in the area, we print them, we put the labels on them, we put the postage on them. We do everything for you. You do nothing except for pay for your half of the marketing. So this is really good. And I'm sure Jim's talked to you guys about this, but you want to find an area that you want to farm. Have you guys, I'm sure Jim, right? You've talked about that.
Yeah, yes.
Okay. So, this is a great way for you to continue farming an area is by, hitting them with print marketing often, not every day, not every week, because it can get expensive. It's not super expensive, but you got to stay in front of them all. And I'll send you the email right now.
Yeah. That's good stuff. So I know we have a lot of options as agents here to do print marketing, but like I've said a million times, you're going to get absolutely nothing from it if that's all you're doing. You've got a door knock in the neighborhood, circle call, host open houses there, host a community event there. Now that COVID's ending, if you can, you're not just going to get business just by paying for and sending out mailers, especially as a brand new agent. I do not recommend it unless you're doing those other activities as well, in which case I definitely recommend it, if that makes sense.
Mhm.
Cool.
Just to reiterate real quick, the beginning story or episode you told us about putting you on the email, you were talking about our offers.
Yeah,
He's seeing you on the actual offer if you're the loan officer. Okay, that's what I thought. Thank you.
for sure.
Okay, cool. A lot of info today. So this is recorded.
Yay.
I got to cut some parts out, but I'm just kidding. So thank you for getting on here. Appreciate it. Ryan, I'm sure I'll talk to you soon. Everybody else, obviously, I'll talk to you.
Thanks, Ryan.
Yeah, my pleasure. Nice meeting you guys. See you.
I'm not going to get into anything else now. So if anybody, needs me or has any questions, just hit me up offline if that's cool. I have a 3 o'clock. Otherwise, I'm available rest of the day. I'm happy to be back.
Thank you so much, Jimmy.
You got it, guys. Yep.
Thanks.
Nice talking to everybody.
Thanks.
See ya.